Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep up with our analysis of the gold market. So we have spent a lot of time on discussion of the background on the gold and the weekly report. Well, it stands not very positive actually, because it's really difficult to find currently some factor, some driver for the gold that could, well, give us the hint that yes, indeed, bingo, this factor, some driver could lead gold to the new top or trigger some reversal or something of that sort. Unfortunately, in any aspect of the current fundamental background in the gold, we can't see anything of this kind. So everything stands against the gold market currently. Interest rates are rising, Fed policy is changing, and on the tightening side, statistics shows good performance, stock market shows good performance, earnings results stands great, inflation is rising, so commodities, I mean the basic commodities, the hydrocarbons are rising as well, so it's really gives the very small room for the gold in the portfolios of the investors. And on the longer term, currently we do not see really chance to invest in gold in this moment. In a shorter term perspective, well, actually the situation stands very similar to the euro currency, not in terms of the patterns, but in terms of the market background. So on euro currency, as we discussed in today's video, we're watching for a daily Brent body trade. On the gold market, we expect also possible downward extension, but it will be based on a bit different patterns. The common thing here is a potential bearish pattern on the dollar index. But the gold market stands currently even less correlated to dollar than euro currency. And drop of the dollar index could support gold, but well, if downward action will be triggered by some additional information, some headlines, news, or statistics, well, it will be really minor relief to the gold, because on the dollar index, despite that we see some bearish pattern, it could last a bit, it could start a bit later, or maybe the value of the drop on the dollar index could be a bit not sufficient to support the gold. So we will see it. But in general, technically, I would consider some bearish setup here. So as you can see on the daily chart, we have ABCD retracement with a sharp reversal based on the data that we've got on Friday. This was great retail sales. So in general, overall performance that supported the United States dollar, and market has dropped here. So it mostly totally erased the previous rally that we said that keep an eye on it. It might be tricky. So because no real reasons for gold rally stands right now in the market. So market in general fluctuates inside of this consolidation, which could be called as a flag or some sideways action, something of that sort. Trend stands bullish, but if you put this in the context of the weekly chart, you will see that in fact this is a retracement of the bearish downside tendency. So the trend stands bearish on the weekly chart, the market stands below the major resistance here. So it means that from the weekly context, it might be the point where theoretically market could start downward action again. So that's why it's interesting currently. Because market stands on the point that, in fact, some kind of the area of the culmination that there's some kind of the focus of the current action. So you will be able to place relatively tight stop orders to take part in this trade, and without taking too significant risk that you usually could get if you're trying to take the position somewhere earlier or when the market already starts some action. So this is the attractiveness of the current situation. On the hourly chart, we have the major picture that we are interested with. So take a look. With this recent drop, we said that in the beginning of the week, we probably could consider some pullback. And market right now stands in this pullback. right on the bottom, we haven't got the double repo that was suggested that maybe it could be formed, but we've got the kind of the head and shoulders or something of that sort, very small pattern. This action we treat as retracement of this drop. And market is coming to the target, as well as in euro currency, when the hourly chart is coming to the target and the resistance. So this ABCD, XLP agrees with the 1780 618 level from the reaction point where the thrust actually started. And take a look at agrees with the 50% major resistance of the whole thrust. So the area between 1782 1785 is our, let's call it vital or signal area. So if we are correct in our suggestion that market starts downward action, it should start somewhere from this area. So it should not break this level up and keep going back to the top. If you will see this performance and break out of the 1785, this will clear signal that our stop probably is failed or not will happen. So as you can see, with the entry right around this area, we do not need to place stop too far. So theoretically, we could ultimately put it above the 18 even based on the daily chart. But if market breaks for the major 618, it with a high probability means that it will return back to the top and probably will show some different performance. So normally, the bearish market should reverse right at this point. This is the first moment. Second moment that I would like to share with you is if you take a look at interest rates performance. Despite those recent pullbacks that have provided temporal support to the gold, and now you can see also interest rates show some downward action. That's also provides some support currently, by the way, to the gold that's climbing higher. Market is forming the consolidation. When the consolidation is forming right at the resistance, major daily resistance, 618 levels, after completing the XOP, so if you remember this, market completes the XOP here. This is not the bearish sign, because bearish reversal happens fast. When the market starts dropping, it usually starts dropping fast. But when the market turns to the consolidation around the major broken resistance, it means that it's preparing to go higher. These interest rates probably will start to rise within the, well, I don't know, maybe close to the end of this week or next week, but this should happen. Besides, if we'll take a look at the real interest rates, you could see that real interest rates also starts climbing, which is previously were standing and really flat right on the bottom, ignoring the fluctuations of the 10-year nominal yield. So currently it's turning higher. So from that standpoint, gold really stands under the hazard of the downside acceleration, let's call it in this way. So, despite this current action that you can see here, well, I wouldn't bet currently on some bullish reversal in the gold market, at least with the information that we have currently. So that's actually what we have currently on the gold market. If you're interested with that, you could think about this setup. Maybe it will be useful. You could try to use it in your trading plan somehow, maybe for not for trading, but for some other purposes. And let's keep watching what reaction market will show us on this 1785 level.